Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So, if that's something that you're looking for, you are in the right place at the right time. I do want to welcome back all of my new and returning subscribers because it doesn't matter how or when you found my channel. I'm just really glad to have you guys here. We have been getting so much engagement. A lot more people have been watching. I've seen a lot of comments, a lot of shares, and I just appreciate each and every one of y'all who are just taking the time to learn and to really do that because the more people that see it, the more people that will be making money, and I think the world will just be a happier place overall. So with that being said, let's really get into today's lesson, and I'm going to be telling you guys about how to use indicators on TradingView. But before I get started, I want to let you guys know that indicators are not required in order to be a profitable trader. In fact, you can get away with not using any indicators at all and still be able to find successful trades. Because what it comes down to is that all indicators are showing you is what you should already be able to identify, and that's what price is doing. So this video isn't going to be too long, but first I'm going to show you guys how to identify reversals with the naked eye. And then I'm going to show you guys how different indicators are telling you the same things about price. In fact, when I do my trading, I'll typically do my analysis with a naked chart, and then I'll go back and I'll confirm with my indicators. If you want to learn more about my strategy, I do have a lot of videos on it, but today we're going to be going over individual indicators and we're going to be building something up, and I'm going to be showing you guys how it's really just all the same thing. Now, first and foremost, if you want to identify a reversal in the market, and the reversal means that price was going one way and then price started to significantly go the other way. Because as we know, the market can ultimately be moving three ways. It can be going up consistently. This is known as a buying trend. It can be going down consistently. This is known as a selling trend, or sometimes the market just moves sideways, and this is known as consolidation. Now, what a lot of traders really struggle with is, how do I know when the market's going to buy or when the market's going to sell? And if you're a new trader, this gets especially be something that you struggle with if you're learning from a bunch of different people on YouTube, you're doing your own research, you're paying for courses. It can really get confusing. So to really simplify it, if you want to identify a reversal for a buy, what you want to look for before adding any indicators is you want to look for something like this at the bottom of a selling trend. So first we're going to go over how to identify a buy. Then I'm going to show you guys how to identify a sell. Then we're going to go over two of my favorite indicators that also help me with this. So if you see a bunch of wicks at the bottom or a bunch of noise at the bottom, that's typically a sign that the market is going to reverse soon. This is letting us know that price is resisting going any lower and it actually wants to push up. If you are a visual person, you could think about it like the basement of a house or the foundation. Once you get to the basement, there's nowhere else you can go but upstairs. So when you start to see wicks at the bottom of a trend, think basement and think buying, because that's when price typically will push up. Now, on the other side, if you go to the highest place in the house that's in the inside, you are going to run into the attic. And once you get to the attic, there's no place you can go but down. So to identify if a market is going to sell, you want to first notice that there's been a big push up or buying trend, and then you'll see that there was a stop and price started to push down. Now, before we continue, and if you're watching this video and paying attention, just go ahead and drop a 7 in the comments to let me know if that makes sense. I'm also just going to scroll on my chart, and I want you guys to just pay attention to where you're seeing that noise or where you're seeing those basement and attic entry points. And I'll just go ahead and circle some for y'all as well. So we can see that we had a lot of noise right here, and we can see that the market pushed up. We can see that we had noise here and the market pushed down. We can see that we had noise here and the market pushed up. And the market is always going to be in these ebbs and flows of buying and selling. But once you can identify those areas of liquidity and those areas of high market activity, you'll be able to better find sell and buy opportunities. Now, what I'm going to do now is I'm just going to use one of my free tools on TradingView, which is under brushes, and I'm going to get the circle tool, and I'm really just going to highlight these specific areas where I see a lot of activity, and we're going to cross-reference these specific areas with our indicators to see that if we would have entered these trades, even without our indicators, would they have been profitable? So let's just say we were to enter the market at this time. Now, we do see that we start to see that noise in the attic, so price should be coming down. The first indicator we're going to add to our chart to confirm this is the stochastic oscillator, and that's one of my favorite all-time indicators. I have several different videos on it that you can check out on my channel. So you want to go to indicators and you want to search for the stochastic. It's Stochastic. And you want to click on it. Now we can see that the stochastic has been added to our chart. Now, if I'm looking for a sell, the things that I'm going to look for on my stochastic are, I want the stochastic to be facing down. I want the orange line to be above the blue line. And I also want my stochastic to cross down back into this shaded area. So let's go ahead and we can literally see that's exactly what happened. But we would have been in our sell and profitable even without checking the stochastic because we noticed that there was noise in the attic. So now for this next area, we're going to pay attention to what happens. And I want you guys to see if the stochastic is confirming what we already would have seen from the market noise. Now, on our next example, when you see the next purple circle, this should be a buy. And the market tends to buy when you see that noise in the basement. And also when you see that the stochastic starts to face up, when you see that the blue line is above the orange line, and when you see that one or both of those lines have crossed above 20, 50, or 80. Now let's look at our next purple circle that's going to be hit. And I want you to look at the price action first. You'll usually see that the market gets pretty choppy. You'll see that noise in the attic. And then you'll also see on the stochastic, we have it facing down. The orange is above the blue, and the lines have crossed below 80, 50, or 20. So as we can see, the stochastic definitely added some validity to our analysis, but it wasn't actually needed in order for us to take the trade. Now, another indicator we're going to go over, because these are indicators that I've reviewed individually on my channel, we're going to go ahead and add the Bollinger Bands. And the Bollinger Bands is a really great indicator for beginners because it has three different lines this time. It has a red line at the top, which typically acts as resistance. It has a bottom green line that typically acts as support. And it also has a middle line, which acts as an EMA. Now, if we put all of our analysis together, we'll see that we would have gotten the same exact results. So let's just go ahead and start from the beginning. Now, once you see that the candles have started to push outside of the Bollinger Bands, that's letting you know that the market is going to reverse. Not only that, we already see our noise in the attic. And if we continue to press play, we can see how that top line on the Bollinger Bands acted as a resistance in addition to having the confirmation that we've already collected on the stochastic. So let's just go ahead and play this out. And for our next purple circle at the bottom, we should be looking for a buy. We already have two confirmations with the candles and the stochastic, but let's actually see what the Bollinger Bands is going to tell us. Now, the green line at the bottom should act as support, and the market should continue to push up once it touches that line. And we can see that's exactly what happened on the Bollinger Bands. So the Bollinger Bands did give us additional confirmation that the market was going to buy, and it also gave us the confirmation that the market was going to sell. Now, one thing I do want to highlight when it comes to using the Bollinger Bands is that the flatter the top or bottom of the lines are, is more likely to be an area of support or resistance versus if the line is slanted, it lets you know price is going to continue to go that way. So this was just really a quick example to let you know that you don't have to use indicators to enter your trades, but they do offer some support and it makes things a little bit clearer to see. So I really want you guys just to find indicators that you really understand and enjoy. This was just two examples. I do have a lot of different playlists, and I have a playlist specifically for indicators for beginners. So if you like this video, make sure you give it a thumbs up. Leave me a comment to let me know what your favorite indicator is. But more importantly, share this video with another trader. That's really all I have for you guys today. Until next time, rich friends.